Hi everyone, welcome to today's session titled Big Ideas, Small Capital. So there is a certain logic behind why we have hosted this particular session today. The feedback generally has been that amongst Smallcase users has been that Smallcase is a phenomenal product, investment product that is out there. But there is a lot of misconception that Smallcase is meant for big ticket customers and Smallcase is meant for somebody who wants to start with 60, 70 or 80,000 of initial investment. So today's session has been designed in such a way that we will be showing you some of these key portfolios or key Smallcase baskets that have been made available on the Kotak platform where the minimum investment amount is under 5,000 rupees. So that will be the key focus of today's session. And for those of you who are new to this particular session or this particular series that we've been having, if you do not know what a Smallcase is, then not to worry because that also will be covered in the first part of the session. So what we will be doing today is trying to understand from a very basic perspective as to what a Smallcase basket is. And post that, we will be exploring some of these Smallcase baskets in which you can start your investment journey with under 5,000 rupees. And at the same point of time, we'll also be showing you how you can set up SIPs and you can invest more as and when needed and maybe diversify your portfolio across a variety of different baskets based on different ideas, themes, and strategies, and so on. So that will be the entire key point or focus area of today's particular webinar. So without further ado, let us go ahead and we will try to explore what a Smallcase is. So when we talk about Smallcases, this is especially for the new comers today. So Smallcases are portfolios of stocks or ETFs weighted intelligently to track a theme, strategy, or an objective. So what does this basically mean? What are we trying to say here? So let us say that as an investor, let us say about 4 or 5 years back, let us say I want to participate in the equity markets. Now, if I wanted to participate at that point of time, what were my options? So my first option and natural option would be to simply open my trading and demat account, go ahead and purchase 1 or 2 stocks. Now, is this really the agenda which you initially had when you were opening a trading and demat account? So generally what tends to happen is that investors, after deciding to get into the markets, eventually fall into this particular trap of buying just 1 or 2 stocks, which have been recommended by their friends, it could be colleagues, it could be CNBC, it could be whatnot. But one thing remains for sure, that the amount of risk that you stand to take if you just buy 1 or 2 stocks in your portfolio or in your basket is that if an external news event comes through, which is going to affect that one particular stock, or let us say the fundamentals of that particular stock change because raw material prices could increase or the management changes, whatever it could be, that particular stock, if it gets affected, then your entire portfolio or entire investment gets affected. So this is a common problem across every individual who has been an investor in the markets has gone through this problem. And it is impossible to proceed without seeing this problem because we have all been there and that has happened, getting stuck in a positions for a very long period of time. So we from Smallcase noticed this problem quite a while ago. And we started an innovative concept which involves buying a Smallcase basically. So let me try to rephrase that segment. So when we at Smallcase identified that particular problem, we decided to come up with a solution which involves a user buying an entire portfolio itself directly rather than just 1 or 2 stocks. So again, that brings the next basic question into picture. What is the guarantee that that portfolio is going to work? Now, let us say tomorrow, as an advisor, I come to you and I tell you that, sir or ma'am, why don't you pick up 5 or 6 stocks in your portfolio or your basket and let us see if that does well. Or let us say, what if I say that I know for sure that it is actually going to do well? Is there any way for you as investors to believe me? Or is there any way for you as investors to gauge my performance? So if I come to you as a random advisor and if I tell you that you can follow my advice, is there a metric which you can compare my performance with? So can you come down and tell me that, Pranav, what has been your track record so far in suggesting something to me? So these are common problems that we noticed across the industry, because there is no way to gauge whether or not a particular stock is actually going to do well. There is no way to gauge if some random advice that is coming from you can work out or not. So this is the reason why small case as a concept came through. So now let me try to explain in a very simple analogy what a small case is. So a small case is just a basket of stocks, which is based on a particular idea. For example, let us say, as an advisor, I wake up tomorrow and I want to build a portfolio which focuses purely on dividend-based stocks, because I've done my research for a long period of time and I know that in the long run, dividend-based stocks tend to give higher alphas or higher returns over a very long period of time compared to investing in an index. And apart from that, they also pay higher dividends. So if I have done this research, can I wake up and curate a portfolio like that? So that is where the concept of small case was born. So small case is basically a platform on top of which we have SEBI registered advisors. So that brings me to the next topic, that is, who creates a small case basket. We have already established that in a very simple way, that a small case is nothing but a basket of stocks, right, which is based on an idea. We will get very soon into what constitutes an idea. But as of now, it is okay for the time being to understand that small case is just a basket of stocks. So let us see, who can create a small case basket? Can you create a small case basket tomorrow? Or can I create a small case basket tomorrow? It is not possible. So the regulations allow small case baskets to be created by SEBI registered professionals. So what do we mean by SEBI registered professionals? SEBI stands for Securities Exchange Board of India. So it is the governing authority of stock markets in India. So SEBI gives out 3 different types of licenses. It could be to individuals or it could be to corporates. So these licenses include something like RA license, which is a which is a research analyst license. We have the RIA license, which is the registered investment advisor license. And we also have the third one, which is the PMS license, which is called as Portfolio Management Services license. So any of these 3 license holders can come on the platform and they can use their own philosophy or they can use their own methodology to curate a portfolio or to curate a basket. So this particular portfolio which has been created by them is called as a small case basket. Now, how is this beneficial for end users? So we will be showing that in a live demo very shortly. But as of now, we can understand that when these SEBI registered advisors curate these small cases or these portfolios are now published on the small case platform. So when the portfolios are published on the small case platform, the end users can basically go and invest in these portfolios directly. So that is the fundamental idea behind what a small case is. So you as Kotak Securities account holders need not basically follow any other steps to go and invest in a small case. All you have to do is just use your Kotak Securities trading and demat account, log into the platform, we'll be showing that to you, and just select the small case which fits your investment requirement and just invest in that particular small case. So it is as simple as that. So moving forward, let us try to understand why this particular session is more focused towards low ticket size small cases. So a lot of people have actually walked up to us and they have told us very clearly that they love to invest in small cases because small cases have become very popular in the market now. There has been a lot of positive feedback about the product as such. But the one common complaint or the misconception that is there amongst users is that it is an expensive product, that the minimum ticket size itself starts at 50,000, 60,000, 1 lakh and so on. So today's session was to basically break that myth. So anyway, moving forward, in this particular session, we will be talking about low ticket size small cases. So as you can see on the screen, low ticket size small cases are direct equity portfolios meant for users who wish to start their investment journey with a relatively low ticket size. So what constitutes a relatively low ticket size? Is it 1,000 rupees? Is it 5,000? Is it 10, 15, 20? So what we define as a low ticket size is any portfolio which you can invest in with an amount of less than rupees 5,000. So if a small case has a minimum investment amount of less than 5,000, that is considered as a low ticket size small case, which is basically meant for every investor that is out there. So there could be another myth that immediately pops up in all of your minds saying, could low ticket size small cases have less performance as compared to high ticket size small cases? Absolutely not. So the ticket size of a small case has no correlation with respect to whether or not the performance is high or low. So irrespective of whether it's a large portfolio with quite a lot of stocks or a small portfolio with limited number of stocks which have been handpicked, we have noticed that the performance more or less is consistent on both the sides. So moving ahead to what kind of what kind of portfolios are available. So on the Kotak platform, with an investment value of less than 5,000 rupees, there are 10 different assorted small cases. So these 10 small cases come with a different philosophy built into each one of them. For example, one of these small cases could be designed with different types of asset classes like equity, gold, and so on. There could be another small case which has only banking sector and insurance sector stocks built into it. So there could be another portfolio which has telecom sector stocks and banking sector stocks built into it, and so on. So each assortment comes with a different philosophy or a different mindset that has gone into building that particular portfolio. So now, moving on, let us take a look at some of the benefits of these low ticket size small cases. So the first benefit that we all know is that you can start with a very low initial investment. So you need not be a HNI or an ultra HNI to think of starting your investment with 5 lakhs, 10 lakhs, or 15 lakhs of investment in the direct equity space. You can start with a very, very minimal ticket size. And the second benefit naturally is that you can also set up SIPs along with it. So if you, for example, wake up today and if you say, I want to start my investment journey, and if you just want to park 5,000 in a portfolio, it makes very little sense to hold that portfolio in the long run, because the actual net return that you're going to make on 5,000 rupees of investment is going to be very minimal. It's not even going to matter. So how is it that these portfolios are meant to be approached? The first idea to approach this portfolio, investing in such portfolios, is to have the SIP mindset from the very beginning, because you're not going to invest a chunk like around 60,000 or 1 lakh or 5 lakhs of investment value. So when that is not just 5,000 of investment and hope for something meaningful to happen in the trading and demat account. So that's not going to happen. So because of that, these portfolios have also been built in such a way that it is meant for SIPs only. So SIPs, as we all know, start building wealth in the very long term. A 5,000 SIP meant, if you have a 5,000 SIP done for a period of 20 years, or if you have it done for a period of 30 years, or if you want to up the SIP size to maybe around 15,000 per month and you want to get it done over 15 years, these can work miracles in the markets. And this is what SIPs is all about. But naturally, some large size small case baskets, for example, the ones which start with a ticket size of 1.5 lakhs, may have a very high SIP ticket size, a minimum SIP ticket size. But for example, something like 20,000 or 30,000, which might not be affordable to most of us. So in such cases, you can, if that is not your cup of tea, what you can do is naturally go ahead and explore smaller ticket size small cases, which will inevitably have smaller ticket size SIPs built into it, which will make the investment journey a lot easier for all of us. So the third benefit of these low ticket size small cases is the ability to choose the basket of your choice. So it is not like we have built only one or we have built only two small ticket size small cases and you'll have to mandatorily choose between any one of these two. The assortment is actually quite high. So if we take a look at the total number of small cases available on the Kotak platform under 10,000, the total number is 10 plus. So that makes it quite easy for we as investors to go ahead and choose which basket it is that fits our requirement best. So moving ahead, let us go for the next important key element of this particular presentation, and that is taking a look at some of these baskets. So naturally, all these the baskets that I will be showing you very shortly, each one of these baskets need to be thoroughly understood before you go ahead and start investing in them. So many of these baskets might look a little similar to all of us, but the differentiation only comes when we thoroughly understand how to go through the overview section, how to understand what are the stocks that have been present in that particular basket, what is the philosophy behind designing that basket, and then we will have to think about how to go ahead and invest in any one of these baskets. So that is the way to go. And right now, that is what we will be showing you. So heading over to the first step that all of us can do is to head over to kotaksecurities.com. So here, in order to see the small cases that are available, you can head over to the products tab. So in the products tab, there will be a drop down under which you will find value added features. And under value added features, if you scroll down, you will be able to see stock baskets here. So you can click on stock basket and you will be now logged into the platform. If you've not been logged in automatically, the system will prompt you to use your KSL credentials to log in, post which you will naturally log in. So before I continue this particular session, I want all of you to, I want to encourage everyone who is attending, taking time out to attend this session, to go ahead and ask as many questions as possible in the questions box that has been provided to you. So it doesn't matter whether you think it's a small question or a big question. So everyone else in the particular session might also have that particular doubt. So go ahead and ask whatever question you want to ask about investing in these particular baskets. And at the end of the session, I will be taking up each one of these questions and talking about it. So moving forward, how do we go ahead and understand where to locate small cases which have been priced under 5,000 rupees? In order to do that, the first thing that we will do is head over to the Discover tab. So I hope all of you can see the Discover tab on my screen, which is next to the dashboard. So when I click on Discover and when I click on all small cases, basically the system is showing me a variety of different small cases via which I can start my investment journey. For example, there is something called as the first time favorites basket, where the minimum investment amount is 1,244. And if I scroll down, I can see a portfolio called the Wall, where the minimum ticket size is 5 lakhs. Similarly, if I scroll down, Master Blaster portfolio has a 10 lakh ticket size. If I scroll down, Abacus Smart Premier League has a 5 lakh ticket size. And then we can see ticket sizes of 11,000, 2,000, 10,000, 14,000, and so on. So can we go through all these one by one and just try to figure out what the minimum investment amount is? It is not an efficient way to do it. So for that, what we from Smallcase have done is we have enabled filter options, which you can find on the left side. So if you see the left side of my screen, you will be able to see something called as the investment amount option available over here. So in the investment amount option, the first option that you can see is under 5,000. So when you click on under 5,000, what the system is now going to do is filter out only those small cases where the minimum investment amount or ticket size is under 5,000 rupees, as you can see on my screen. There are no portfolios which have been listed which require more than 5,000 of ticket size. So what else is possible using these filter options? So before I get into each one of these small cases one by one, we will try to understand what else we can use in order to segregate small cases. So now the first thing that we need to establish is that we are only going to look at low ticket size small cases today. If I as a user, if I'm going to focus only on low ticket size portfolios, what is going to be my next concern as a user? So as a user, I'm naturally going to think, am I investing in a risky portfolio or am I investing in a a low risk portfolio? So in order to do that, you find taggings over here. So if you find a tag called high volatility, it means it is high risk, high reward. If you scroll down and find something called low volatility, it means low risk, but low reward. And if you scroll down and if you find medium volatility, it means, a very simple thing, medium risk, medium volatility. So if you don't want to scroll down, you can also use these options over here. If you click on low volatility and under 5,000, the system will present you only low volatility small cases which are under 5,000. If you put it on high risk, it will show you high risk, high reward small cases which are priced under 5,000. So now let us try to understand any one of these or a few of these particular baskets in detail, and we'll try to explore more about the logic behind these small cases. So the first small case that I would like to take is the second one, which is called Quality Starter Basket, which has a 2-year CAGR of about 47%. So let us try to explore more about this particular basket. So if you see this particular basket called Quality Starter Basket, here it clearly states that the stocks in this basket belong to banking and life insurance sectors. So in a single line, we have understood what it is that we are investing in. That is a basket of insurance sector stocks and banking stocks. And also, why is it that we are going to invest in it? So for example, if you see this particular portfolio, if you head over to the stocks and weight section, you can basically see 3 stocks that have been listed as of today. The first stock, which is, and all 3 of these stocks have the equal same amount of weightage. So if you see under segment composition, you will find that public banks has 33% exposure, which comes under SBI. We have insurance stocks, which have 33% exposure, which comes under ICICI Prudential Life Insurance. And we have private banks, which is where the highlight has been put, or the investment is happening in ICICI Bank as of today. So here, if you scroll down, you will also see that the entire portfolio is made up of large cap stocks only. So why is it that these 3 stocks have been selected for this particular portfolio? So there will be a logic behind doing everything. If we take a look at public sector banks, SBI has been leading amongst all public sector banks in terms of keeping its books healthy, and also in terms of how the bank has revolutionized itself into digitalization. So there has been a significant jump in the number of accounts, digital accounts that are being opened on the YONO SBI app. So people are preferring less and less to go to branches and open them directly. And the bank also is pushing aggressively into being highly digital going forward. And this is something that has been well received, not only by the existing SBI customer base, but also the newer, younger customer base, which is preferring to go with SBI because it's completely, digitalized itself, being a public bank. So that is something that, this portfolio feels comfortable investing in. Similarly, if we take across, if you aside the concept of public sector banks, and if you move to private sector banks, then over here, again, ICICI Bank is in the forefront in terms of keeping its books healthy. So that is a bank that has been chosen under private banks. Similarly, if you head over to the insurance sector, we have ICICI Prudential Life Insurance Company. So there is a logic behind it. If we take a look at some of the premiums that most of these life insurance companies are asking for today, you will notice that ICICI Prudential has the premium priced a little lower than many of its competitors. And being a very strong brand, that becomes the first chosen policy insurance company for many millennials. At the same point of time, if we take a look at many of these companies which are featuring on even third-party platforms, like for example, Policy Bazaar, you will see that ICICI Prudential has been doing quite well in that particular space. So that has been chosen in the insurance sector, and that has been given 33% weightage. So if you head over to the overview section, and if you scroll down, you will notice that ever since the inception of this particular basket, this particular basket has significantly outperformed the overall large cap index. So we can notice that every 100 rupee of investment which had happened in 2016 in the equity large cap space would have become 226, whereas the same 100 invested in the quality starter basket could have become 272, which gives it a significantly higher amount of performance. So you can see that similarly in the blue line versus the yellow line comparison, the blue line being quality starter basket and the yellow line being the equity large cap index. So portfolios like this are meant for lower ticket size customers who can invest in baskets where the number of stocks, the exposure being taken to the number of stocks are limited, but they're concentrated for a reason, being that the SEBI registered advisor who has curated it believes that this is the basket that is actually going to do well. So if we are taking a look at quality starter basket, what we can notice is that this basket has been created by Kotak Securities research team itself. So Kotak Securities research team is also curating Smallcases on the platform, that is on their own platform, and they will have a certain rationale or philosophy behind curating this particular basket, which is what I had explained to you. So now the next question becomes, if we want to invest in such a basket, what is the average return that this basket has been able to generate over a period of X amount of time? So this portfolio has been live on the platform for 2 years. And on these 2 years, it has given a CAGR return. CAGR stands for compounded annual growth rate, which represents the average return that it has given on a yearly basis. So if we take a look at the 2-year CAGR, on an average, each year it has been able to generate about 47% of return for its investors. So it doesn't mean every year it's going to generate the same thing. That is a misconception. 1 year it could generate 20%, the other year it could generate 60%. It really depends on the market condition. But this figure is the average return that it has been able to generate up until this moment from the past 2 years. So you can also notice that this is a high risk, high reward portfolio. So this is meant for, since the investment value is going to be less, you can maybe think of investing 30 or 40% of your investment capital into these kind of portfolios. So that brings us to the next question. What is the minimum investment amount required to invest in a basket like this or to invest in a portfolio like this? So here we can see that as of today, the minimum investment amount required to invest in quality starter basket is just 1,800. So the reason why it is 1,800 is because it is taking a concentrated investment into just these 3 particular stocks only. So now that brings us to the next natural question. If I as an investor if I'm going to invest only 1,800 in this particular basket, and if the number of stocks are only 3, will this portfolio really be able to do well in the long run? What if one of these stocks don't do well? So going forward, what if some management change happens in any one of these 3 companies, or going forward, what if some bad fundamentals happens in any one of these 3 stocks? How do we proceed? So that is the reason why, even though it may look like this portfolio is taking exposure only to 3 stocks, but one key fundamental thing to really understand is that these small case baskets are constantly being monitored and reviewed by the entity who has curated this particular basket. So in this case, Kotak Securities research team is going to keep a very close watch on this particular portfolio. You can see that over here. Here it says constituents of this small case were last reviewed on February 9th, 2022 and will be next reviewed on May 9th, 2022. So what does this mean? This means that this particular portfolio is being monitored by the research team once in a quarter. And that is 4 times in a year, this portfolio is being looked at. And if they notice that any one of these stocks may not do well going forward, that stock will be removed and a new stock which can do well will be added in its place on the review date. So that procedure is what we call as rebalancing on the platform. So even though it is these 3 set of stocks today, 6 months later, it could be 6 months later, any one of these stocks can be removed and another better stock could be added in its place, depending on the market condition and the fundamentals of stocks at that point of time. So it is, even though it is a smaller portfolio, it still remains as a very dynamic portfolio. And if you wish to start your investment journey seriously, you can go ahead and start with a higher minimum investment amount also. So just because the minimum investment amount is 1,800 does not mean that you actually start with 1,800 of investment. So for you to start seeing meaningful returns, you will have to park as much as 5 to 10,000 in any of these portfolios that you believe in for a very long period of time, which starts generating returns when the market started going up, which will happen in the long run. So keeping that in mind, the investment journey that you will have to follow is to start setting up SIPs in these kind of baskets. So before I head over to before I head over and show you how to do all that, let us take a look at some of the other baskets that are available too. So for example, let me keep it at under 5,000. Let me scroll down and let me choose a small case that is one of the most invested small cases on the platform. So we have a portfolio called All Weather Investing, where this particular basket invests in 3 different types of asset classes. So before moving on to the performance of the basket, I would like to show you how this basket works. What is the logic behind it? So to do that, it is a very simple thing. You just have to click on ETFs and weights. And now if you scroll down, you will see that this basket invests in 3 different asset classes. So even there we saw 3 different sectors in which we were investing in the previous portfolio: public sector bank, private sector bank, and we had insurance. But here, this portfolio is investing in equity, that is 35% in equity, 37% in gold, and about 26% in debt. So what this portfolio is doing is diversifying your investment in 3 different asset classes. Now, why is it diversifying it into 3 different asset classes? So there is a logic. Let me explain that when I come to the performance part of the portfolio. So if you see here, how do we invest in gold using our trading and demat account? It happens through an instrument called Gold Bees. So here the gold investment of 37% of your portfolio is happening in an instrument called Nippon India Gold Bees ETF. Similarly, how is the equity allocation happening of 35-36%? That is being invested through 2 different ETFs. One is the Nippon India Junior Bees ETF and the other one is Nippon India Nifty 50 Bees ETF. So with respective weightages of 20% and 16%. And similarly, how are we investing in debt as an asset class? So debt investment is happening through something called as liquid bees. So the price of liquid bees always remains constant and a certain amount of interest is paid out to its investors. So these are the 3 asset classes we are investing in. Now, again, before you assume that it has only 3 asset classes or it has only 3 or 4 ETFs inside of it, so it might not be as good as a portfolio which has 20-25 stocks inside of it. Let us try to get some things clarified. So it does not mean that if a portfolio has too many stocks inside of it, that it is actually going to do well, because that would make the portfolio over diversified. If the fund manager is not very clear as to why they have put in 25 stocks in that portfolio, then the performance of the portfolio will be more or less similar to the performance of an index itself. Because, for example, Nifty 50 has only 50 stocks inside of it. So if you have a portfolio of 25 stocks inside of it, naturally your account will perform not more or not less than just the index itself. Or a simpler thing would be just to go and invest in an index randomly. So that also doesn't mean that if a portfolio has only 2 or 3 stocks, it is going to do bad or it's going to do badly. So if the rationale behind why these 3 ETFs or these 3 stocks were chosen, if that particular rationale is clear, then that portfolio can give a far better return than a portfolio which has 10 or 12 stocks built inside of it. So really, there is no way to precisely say that lower ticket size or medium ticket size or higher ticket size small cases can do well compared to each other just using the ticket size as a benchmark. That is simply not possible. So we will try to understand more with this particular example. So now we can see in this portfolio that 36% of investment has happened in equity, right? Now, what is the necessity for us to invest 37% in gold? So there is a logic behind this. Historically, when we go back to a very, very long period of time, gold has been seen as one of the currencies, you could see it as these days it can be seen as a reserve currency. Previously, you can see it as an asset class, but even prior to that, you would have seen it as a token of exchange. So gold used to be the token of exchange post the barter system. So gold has been viewed as a safe investment or as a safe haven during turbulent market conditions. So this has been the same condition if we take human transactions and date it past 1,000 years. and it holds good as it is even today amongst retail individuals like us as well as governments. So even governments of all countries hold gold and keep it as a reserve currency in their treasuries. So why is it that gold is being invested in? Because when the markets don't do well, let us say that going forward, something disastrous happens in the market. It could be because of a new war that is going to take place. It could be because of a simple reason that the markets are overvalued. It could be another wave which has a very, very positive, very negative impact on humanity and business as such. There could be a variety of reasons why the markets are going to correct. And from what we have seen, there has been a 30-35% correction in the market on an average once every 3 years, on an average every 3 years since the last 20 years. So if you take the performance of Nifty as an index from the year 2000, and if you tally it till 2020, 2021, you will see 7 corrections happening with a minimum correction of somewhere around 25 to 30%. So you will notice 7 such corrections coming in. One or two of these corrections could be, for example, 2008 and COVID crisis could be as high as 50-60% also. So these corrections are a part and parcel of the markets, and it will so happen that it could be because of bad entry, bad timing, whatever it is, we could be on the bad side of that particular correction. It could so happen that we decided to start our investments, and after our first 5 SIPs, the market decided to go down. So these things have a negative impact on us as individuals, and it might keep the portfolio also a little unstable if your timing is not correct when you're entering the market. So that is the reason why having gold makes sense in a portfolio. What happens is gold is negatively correlated with Nifty. So if equity market is going up, then gold as an asset class will be not going down, but it might not be performing well in the short term. Similarly, if equity market is not doing well, let us say it goes through a very severe correction, you will notice that inevitably, where is that money flowing out into? So a correction is basically money flowing out of the stock markets, right? That is when the correction comes. So when people are withdrawing their money from the stock markets, the markets start falling because of the market pressure. So where is that particular fall? Where is that particular capital going into? So if you see historically, even during the COVID crisis, you will see that whenever such a correction comes, that money which is being pulled from the equity markets gets pushed into the gold markets because gold is seen as the safe haven. So when equity starts falling down drastically, gold starts going up drastically. In the long run, if you see, both equity and gold will naturally be going up. But in the short term, when equity falls, gold will go up, and when equity goes up, gold will go down. And this naturally continues in the short term. So this is what a portfolio like all-weather investing is trying to capitalize into. And also to keep the portfolio a little stable during all conditions, we have around 25% exposure to debt. So this can change according to market conditions. Let us say tomorrow the market falls by 50%, for example, for whatever could be the reason. When that happens, the markets will become extremely undervalued, and picking any stock, any random stock will do well. So at that point of time, it makes more sense to go ahead and invest more of your capital into the index. So at that point of time, from this portfolio, 37% of exposure can be reduced from gold, and more exposure can be put into asset classes like equity. And equity at that point of time can hold 60% weightage, gold can hold 20, and debt can hold 20. Similarly, let us say the markets rally quite high and become very unstable. So at that point of time, more amount can be allocated to gold. For example, gold can have 50% weightage, Nifty can have 25, equity can have 25, and debt can have 25. Something like that can also be done. So that will be done on the review date or the rebalance date. All these small cases, irrespective of whether the minimum ticket size is under 5,000, under 50,000, under 5 lakhs, whatever it could be, they are required to go through a rebalancing process. And this rebalancing date will be mentioned here upfront for all the users to see. So here we can see that this small case was last reviewed on April 1st, 2022, and will be next reviewed on July 4th, 2022. So now that we have discussed so much about this particular basket, it only makes sense to see whether the portfolio is doing well or not, right? So if you see the last 4 years CAGR means compounded annual growth rate, it is giving an approximate return of 12.5% on a yearly basis. So this portfolio is not meant for customers who want a high rate of return or something like a 50% return on an annual basis, or something like if they're targeting a 20-25% return. This portfolio is not going to deliver those kind of returns, and it is not meant to deliver those kind of returns. It is meant for those of us as investors who prefer stability over risk. Let us take a look at why. If you take a look at the live performance of this particular basket, you will notice that the blue line is all-weather investing and the yellow line is the equity large cap index. So if you see today, there is no real performance difference between both these baskets. So 100 rupees invested in July of 2018 has become 154 in all-weather investing and has become 158 in the equity large cap index. And if you had checked this about 2 days back, you would have noticed that all-weather investing would have given a higher return compared to equity large cap index. But more or less the returns are similar to the large cap index. But what this basket is doing is, because of its exposure to other asset classes apart from equity, for example, like gold, it could be debt, because of that particular feature of this basket, it is not reacting to the market much. So if we see, let us see with an example. So if we take a look at how the markets have reacted from Jan 24, 2020 and post that particular time frame for the next 1.5 to 2 months, you will see that by March 31st, 2020, the index has basically corrected by 35%. And even the large cap index has corrected in a similar fashion. But if you notice this particular basket, that is all-weather investing, you will notice that there is no real meaningful correction coming here compared to how much the index is correcting for. The reason being that it already had gold sitting inside of it as an asset class and debt sitting inside of it, which started moving up as soon as equity started going down. And this is how the portfolio protects itself during turbulent market conditions. Now, let us try to explore whether it will do phenomenally well during good markets. So what constitutes a good market? Something like what happened here post the market crash. So once the market crashed, as of that is March 31st, you will notice that from April onwards, the market started giving a very bullish run. So that very bullish run can be a very good run for the equity markets. But if you notice, all-weather investing as a portfolio, it is still doing in the same standard way. The same thing that it was doing when the markets was going down, it is doing the very same thing when the markets are going up. And if you can see the time period prior to this, when the markets were very normal, just before the COVID crash came, if you see the last 1 year performance, that has also been more or less similar between all-weather investing and the equity large cap index. So this is the feature of a portfolio like all-weather investing, where it maintains stability, gives a similar, at least as of now, has given a very similar return compared to the index, minus the market ups and downs that investors need to go through. So because of that, this has made all-weather investing one of the most preferred small cases on the platform. So if you notice this portfolio, it is the most subscribed to small case on the platform itself. So similarly, when we head over to discover and all small cases and click on under 5,000, we'll find a variety of different portfolios, each with its own philosophy built into it. So you will notice that the first time favorites basket has a minimum ticket size of 1,044 and a 2-year CAGR of somewhere around 58%. Similarly, if we head over to early bird assorted basket, it has a CAGR of 44% and a minimum ticket size of 2,511 and so on. So you can see all the portfolios listed over here. Now, if we as investors, if we want to invest in the basket of our choice, how do we go about doing that? So let us try to understand that with an example. So now let us say that I want to invest in Kuber basket. Now, the first thing that I'm going to do is click on Kuber basket and it will immediately tell me that this is a basket of high dividend pay stocks. And here the return is approximately 40% every year in the last 2 years, which is the CAGR. And if I scroll down, I can see the overview section here. I can see the stocks and weights here. So you can notice that Kuber basket in spite of having a very low ticket size of just 3,660 rupees, is diversifying itself into a variety of different stocks. For example, under power, it is taking exposure to 3 power stocks. Oil and gas, it is taking exposure to 4 different stocks. Metals and coal, 1 stock each. So in this, if you want to invest in portfolios like this, the first thing that you need to ensure is that this particular minimum investment amount is available in your Kotak Securities trading and demat account. Once that is available, the next thing that you need to do is click on the Invest Now button. So now, when you click on Invest Now, the system prompts you to start your investment either as a monthly SIP or as a one-time investment. So you can go ahead with any of these. Once you click on one time, you can scroll down and see all the set of stocks that you're actually getting. You can head over to the review orders section and check that out. Meanwhile, if you wish to invest as a one-time activity in any of the portfolio, just to test the portfolio, for example, you can proceed with the one-time button. If you wish to set it up and make it a daily practice for you to invest in such kind of baskets, you can go for monthly SIP as a basket. So in this example, let us first proceed with a one-time investment, and then we will see how we can set up an SIP also if we want. So when I click on one-time investment, what is happening is the minimum ticket size is being predetermined by the system and it is being displayed over here. So it says 3660. But what if we want to invest more in that particular basket? If we want to continue with this amount, we can simply click on confirm amount. If we want to change this particular amount, what we can do is put the amount of our choice. For example, let us say we want to start with 7,500 of investment. You can click on 7,500. You can input 7,500 here. Click on confirm. It will choose the nearest amount to 7,500, that is 7,448, which can be put across properly in all these set of stocks depending on the current market price. That amount will get selected here. Now you can proceed by clicking on Invest Now and confirm orders. So once you do this, you'll just have to wait for less than 10 seconds for all these orders to get filled. So what is now happening? So as you can see, all the orders have been filled. So right now we are using, I know that the markets are closed, but we are using a test account to show you exactly how it works in real life also. So now we can see that all the orders have been filled, which means that 9 out of 9 stocks have now been purchased as a part of this small case in our own Kotak Securities trading and demat account. So now we own these stocks in our account. In order to check our investments, we can click on See Investments and we can scroll down and we will be able to notice Kuber basket has already been purchased using Kotak Securities in our account. So if we want to check what constitute the status of that particular portfolio, what you can do is come to the Investments tab here. Let us say once you log in, you're on the dashboard. On the right side, you will see the Investments tab. You can click on Investments tab, come down and click on the basket of your choice, which is the Kuber basket in this case. And now you can scroll down and see the total returns in terms of rupees here, the total returns in terms of percentage, and the current value of your investment, which will include the capital gains. That will be displayed over here. And if you scroll down, you will be able to see all the list of stocks here, the current market price of these stocks, the price at which we originally bought, the percentage return that each one of these stocks have been able to give us, the total weightage, and the total number of shares. So all this will be visible right over here. Now, if we as investors in the future, let us say as of this moment, we started with 7,500 of investment. In the future, what if we want to invest a little more into that basket? What we can do is head over to the Investments tab, scroll down, click on the small case of our choice, and click on the Invest More option. When we click on Invest More, the system decides the minimum ticket size that is required to invest more in a basket like this. So for this particular basket, it is 812. We can naturally increase this amount to, we can put in something like 2,500 and click on confirm. And it will start according to 2,500. It will decide the set of stocks which need to be purchased and the value of the stocks that need to be purchased. So now that has been decided by the system over here. I can click on Invest More and confirm orders. And again, it's as simple as that. We'll just have to wait for under 10 seconds for all the orders to get executed. And we will be able to see that on the screen like we're able to see it once it's done. So now you can again go to see investments. And what if you do not wish to make this a practice where you will have to remember, investing in a basket every time? What if you want to make it an SIP kind of disciplined approach? So in such a case, you can scroll down and you will find the Start SIP button listed under More Actions. So here you can click on Start SIP. Under the Select SIP date or the Select Start date, you can choose any date on which you want to start the SIP. You can select the frequency. So for this basket, we have weekly, fortnightly, monthly, quarterly frequency. For most of the baskets, you will have all these 4 frequencies. For some baskets, you might have 3 frequencies. So anyway, I'm going to keep it at monthly. Let us say we select the date as 30th, which is the salary date for most of us. The minimum SIP installment amount will be displayed by the system right over here. If you want to make it any other amount, you can make it so. Then you can click on Review Orders, Set up SIP, and Continue. And now you will notice that the SIP has been made active and your monthly SIP has started. Similarly, you can keep a weekly SIP, fortnightly, that is once in 2 weeks SIP, quarterly SIP, and so on. So this is all about low ticket size small cases on the platform. So since this is a 1 hour session, I was not able to cover each one of these small cases in depth, but it is my understanding that for the attendees today, you will be able to head over to the platform, use your KSL account login, and research about these baskets in detail, including their performance, the rationale or logic behind it, and how long you would want to stay invested in some baskets like this. So with that said, from the presentation point of view, I would like to conclude this particular presentation. But at the same point of time, let us go ahead and try to answer some of the queries that have been asked by the questioners in the question box today. So this is the right time. If you haven't posted a question yet, but you're having some doubt about small case as a product or low ticket size as a product, what you can do is immediately head over to the questions box, post your question, and get it clarified right in this particular session itself. So the first question is, can you please differentiate between a small case and a mutual fund? So comparing small cases and mutual funds is like comparing apples and oranges. There are 2 different types of investment vehicles. Small cases are direct equity products, whereas mutual funds are not direct equity investments. So in a small case, you can create any type of basket that you want. For example, if a fund manager tomorrow wakes up and if he says that the best way to invest is, at the moment, I want to invest X amount of money in equity, X amount of money in gold, and so much into liquid Bs and maybe 1 or 2 stocks on the side, that can be allowed on a platform like Smallcase, but that might not be regulatory compliant when it comes to a product like mutual fund. Similarly, we have a variety of, for example, thematic portfolios also on the platform. For example, we have a portfolio called Electric Mobility. It's not an under 5,000 portfolio, but I'm giving this information as because this question was asked. That is a portfolio where we invest only in those stocks which have exposure to electric vehicles in India. So that kind of a portfolio cannot be created regulatory wise in other assets or in other products that are available there in the market. So that is one of the key differences between Smallcase and some other products that might be out there in the market. If we were to take a look at Smallcase and a PMS, so portfolio management services and Smallcases more or less work in a similar fashion with a couple of key differences. So in a PMS, the minimum ticket size is 50 lakhs. In a Smallcase, as we discussed today, the ticket size can be as low as 1,500, 3,000, and so on. At the same point of time, PMSs some PMSs will have lock-in periods. Small cases do not have any lock-in periods. Some PMSs might have exit loads of 3%, 2%, 1% when you want to exit the portfolio. Small cases have no exit loads. So, there also are no expense ratios exactly for a small case. So there might be a one-time charge of 100 plus GST to invest in a small case, But apart from that, the portfolios that I showed today are free of cost portfolios. So you can go ahead and invest without incurring any charges. You will incur 100 plus GST, that is 118 rupees as a one-time charge, but you won't incur that again and again if you want to invest more or set up an SIP. And this 100 plus GST remains same, whether you want to invest 3,000, 30,000 or 3 lakh into the portfolio. So now I believe that this question has been addressed for the question asker. So for those of you who are asking what would be the actual rate of return that the portfolio will give, it depends on the type of portfolio. For example, if you invest in a portfolio like all-weather investing, you are not going to, or you should not be expecting a 20% or a 25% CAGR going forward, because that portfolio is not meant for those kind of investments. It is, as we saw, it performs almost equally well during a bull market and a bear market and a normal market. It's giving a 12.5% CAGR, and it is expected to be in that particular boat only. But there are portfolios which we saw where the CAGR rate was 50%, 55%. So what kind of a return a small case gives is dependent on what small case you are looking at on the screen. So the question by Devendra is, can you please mention the terms that are important while making a small case portfolio? So Devendra, I do not quite understand this question. If you can rephrase it and put it in a better way, I might be able to understand it, because I do not understand what you mean by what terms are important. So so Somnath, you're asking for the charges of small case charges in brokerage. So from small case, you will find, like I said, you will find 100 rupees plus GST charge. Apart from that, brokerage is something that you will have to pay depending on what your brokerage amount is. The best thing to do is to ring up your relationship manager at Kotak, and he will be able to guide you better on this. If you do not have the contact details of your relationship manager at Kotak, what you can do is ring up the customer care at Kotak Securities and hand them over your trading code. Once you do that, they will assign the concerned relationship manager to you, and they will also arrange for a call back from your relationship manager to you. So that is something that you can think of doing. So all the questions with respect to charges, I think that I have addressed. There is a question called, what are the entry exit restrictions with respect to small cases? Absolutely no entry or exit restrictions at all. So if you invest in a small case now, you can exit it after 1 minute without paying any sort of exit loads or incurring any sort of hidden charges, or the platform making it mandatory for you to hold it for any number of time. There is no small case on the platform where you cannot exit out of that particular portfolio. There is absolutely no lock-in period, is what I'm trying to say. You can exit as and when you wish without facing any charges for it. So there is a question which says, I have 25 lakhs and I would like to invest in an aggressive way. Where should I invest? So in such cases, the best thing that would be advisable for you is to simply ring up your relationship manager. He'll be able to tell you the exact portfolio that you can think of investing in when the ticket size is really high, like 25 lakhs. So if you want to invest 25 lakhs, then you can go for a higher ticket size small case, because the diversification is happening more in that particular small case because your ticket size is more. So if that is the case, you can go for a higher ticket size portfolio. But if you want to start with investment amounts of less than 15,000, then smaller ticket sizes would be suggested. So smaller ticket size small cases would be suggested. So can the small case be purchased or redeemed only during market hours? So yes, the transaction happens only during market hours because these are direct equity stocks. But if you place a small case buy order post the market hours, pending order is placed, and on the next day when the market opens, these orders will get filled. Same goes for selling a small case. If you want to sell a small case, you can click on sell and keep it. All the pending orders will be placed if the markets are closed, and next day early morning at 9:15, whatever is the open price, it will get executed at that price. So if you want to place it in a live market, you will get the live prices. If you place it on an off market or off market hours, at that point of time, it will get executed on the next day at 9:50 at that particular price. So I hope I've answered that question. So details like which stocks they're going to invest in is not, I'm not able to see in any of the basket. So you will be able to see in the basket, Rajendra. That is what I had shown in this particular session. If you meant the question is, if the question is what stocks are they actually going to invest in the future during a rebalance, that even the fund manager will not know till the time of rebalance. So let us say I'm the fund manager, there will be no idea what I'm going to do 6 months down the line because the market conditions will change. So at that particular time, when I'm rebalancing, I'll be looking at the current market condition and I'll be initiating a rebalance from my side. When I initiate it from my side, you as the user will get to know what stocks I'm going to buy and what stocks I'm going to sell. So that comes to you as a notification, as a rebalance notification. And once that comes to you, the authority of whether you want to proceed with that rebalancing or you want to continue with the same set of stocks, that onus lies with you. And you can either choose to accept the rebalance or you can choose to reject the rebalance. So I hope that that question has been addressed from my end. So can the small case stocks be used to settle insufficient quantity of the same stock in trading activity? I do not know what you mean by this. If you're asking about can small case stocks be pledged, I believe yes, the small case stocks can be pledged because small case, we might call it a small case, but the system understands it simply as set of stocks inside the customer's trading and demat account. So if you're asking questions about pledging it for margin, it is possible. Anyway, it is better to clarify that once by speaking to your RM at Kotak. So the next question again is, can we pledge the basket? Yes, it is possible. Can an NRI account use this option? Absolutely yes. NRIs are free to welcome. We have plenty of NRIs investing in small cases. So what are the charges? I've addressed it. I can see a lot of questions coming about margin. That has also been addressed. So somebody asks, Money asks, what about selling? Is it by unit or is it by amount? It is by amount, Money. It is not by the number of units that we decide whether to, how many units to keep in this basket or how many units to exit. So one thing you'll have to keep in mind, let us say there is a small case called, for example, all-weather investing. Let us say you have invested 10,000 in that particular basket and another person who is attending this session has invested 5 lakhs in that particular basket. So the number, if we want to, let us say, decrease exposure of gold in that basket from 40% to 30%, the number of units that you will have to sell in your account will be different from the number of units that he has to sell. The percentage of the portfolio is the same, but the number of units varies. So the selling happens based on the percentage of the portfolio that needs to be changed. It is not really the units and not really even the amount. What would be the composition of the basket change in future? If so, how will it be managed? So I think that has also been addressed. It happens through a rebalancing. You will get to know what stocks need to be added at the time of rebalancing. That is on the next review date, which we had seen on the screen. That next review date is available for each and every particular stock basket. Sorry, small case basket. So you will be able to go and see that clearly. So Pradeep says charges to maintain small cases. No such charges, Pradeep. There'll be a one-time charge of 100 plus GST, and you might incur brokerage charges if you're having that portfolio. But apart from that, there is no monthly charges for holding a portfolio. So invested stocks will it be credited to the trading and demat account? Yes. All your invested stocks will come into your own Kotak Securities trading and demat account. So you will be the owner of these stocks. So the next question is from Shahil. Can we set up trigger notifications for volatility in order to enter exit investment baskets? So Shahil, this question requires a thorough understanding or a thorough explanation from my side. So here you are not deciding when to enter or when to exit a set of stocks. The fund manager is doing that. So you can allow the fund manager to decide on where the volatility levels are and what stocks need to be maintained in that account. You do not, the benefit of small case product is that you do not have to put too much of your energy into it. So is the settlement timeline same as equity? Yes, the settlement time is same as equity. Does the rebalance happens during major market conditions? Yes, it happens during both major market conditions and planned time slots. So with that, I believe we have addressed most of the questions that the users have inquired today on the platform. So I hope that this has been a lively session for all of you, and that you now have a better understanding of how smaller ticket size small cases work. So with that said, we do keep conducting sessions very often. So I hope to see all of you in a future session going forward. And thanks a lot for taking the time out and coming to today's session.